Hello everyone. So picture this. It's 2025 and we are in the United Kingdom, one of the most stable economies in the world. It loses a net 16,500 millionaires in a single year. They pack up and they leave. According to Hellenian Partners, the largest single destination for that wealth is United Arab Emirates. The UAE absorbs a net inflow of 9,800 millionaires out of these 16,500, retaining its position as the world's number one wealth migration destination for the fourth year in a row. Now 6 months later, in February 2026, a war breaks out. Iran starts firing ballistic missiles and drones at the UAE. Dubai International Airport shuts down for the first time in modern history. CNN goes live, Bloomberg goes live, and in the weeks that follow, the financial press starts asking a very serious question. Is this finally the moment when Dubai cracks? And here's where it gets interesting. Because if Dubai was really cracking, these 9,800 millionaires, the ones who just moved here, would be the first to leave. They have the jets, they have the second passports, they can be in Singapore, Switzerland, or Monaco by tomorrow morning. But they are not leaving, they are staying. They are buying and they are expanding. The Dubai International Financial Center just registered 775 new firms in Q1 2026, which is a 62% jump year on year, and the strongest start of any year in DIFC's history during the war. So the question is, what do these people know that the headlines don't? Why are the world's wealthiest, most mobile, most informed investors looking at the active warfare in the region and deciding this is still the place to be? The answer is one word: fundamentals. They are not betting on Dubai's good luck. They are not betting on the war ending quickly. They are betting on something much deeper: the structural fundamentals that have made this city the world's number one wealth destination for 4 consecutive years. And those fundamentals don't disappear because of a 30-day military exchange. So in this episode today, we are going to break down those fundamentals one by one. I'm going to give you my take with real numbers, real institutional sources, and real comparisons. And by the end of this video, you're going to understand exactly why the smart money isn't leaving, and what that tells you about what you should be doing right now. I'm going to break it down into 5 chapters for you. Chapter 1, the honest damage report. What actually happened during the war with real numbers, no sugarcoating. Chapter 2, what the rest of the world looks like right now, because Dubai is always being judged in isolation, and that's the wrong frame. Chapter 3, how Dubai handled the war on the ground, which honestly is a masterclass in itself. Chapter 4, and this is the chapter I really want you to pay attention to, because there's one number, just one number, that explains how Dubai's economy actually works. It's called the 7.7 multiplier. Almost nobody talks about it. And then chapter 5, the 3 takeaways, what the data is actually guiding you to do. Let's start with the damage report. Now before I make any bullish case to you, I owe you the bear case in full. Because if you are going to take the upside seriously, you need to know exactly what the downside looks like. So let's go. The war between Iran and Israel and the United States escalated on the night of February 28, 2026. Over the next 40 days, according to the UAE Ministry of Defense, Iran launched 537 ballistic missiles, 2,256 armed drones, and 26 cruise missiles into the United Arab Emirates. The UAE's air defense system network, Patriot, THAAD, developed by the US, Barricade, developed by India and Israel, NASAMS, Norwegian defense system, intercepted over 96% of incoming projectiles, according to Janes. It's a global open source defense intelligence firm. But the 4% that got through caused real damage. Specifically in Dubai, the Fairmont Hotel on the Palm, the Burj Al Arab, and the 23 Marina Tower sustained debris damages, and the Address Creek Harbor 2 got hit by a drone. There were 13 fatalities and 224 injuries in the country. Real lives lost and real families grieving. On the economic front, damage was sharp. According to CoStar STR, the global authority on hotel performance data, Dubai's hotel occupancy on February 2026 was 84.7%, which is very healthy. By March, it had crashed to 33.1%. This is a 54% year-on-year collapse in a single month. One of the worst months in Dubai's hospitality. Tourism economics estimated that the regional inbound visitor spending could fall by $40 billion across the broader Middle East. Jebel Ali Port, the largest container terminal in the region, saw weekly throughput crash from approximately 690,000 containers in January to 140,000 by early March. That is a 79% decline caused entirely by the closure of Strait of Hormuz, where the insurance companies refused to cover any vessel in transit. UAE's crude oil production, according to OPEC's monthly data, fell from 3.4 million barrels per day in February to 1.9 million by March, a 44% collapse. The Federation responded by exiting the OPEC entirely, effective May 1, 2026, the most significant geopolitical realignment of the global energy market since the cartel was founded in 1960. All these are the first line impact of the war. And then there's the property market. According to Property Finder, January 2026 was the strongest month in Dubai's real estate history. Over 17,000 sales transactions worth 72.4 billion dirhams. February held up to 60.8 billion dirhams. Then the March hit. According to Arabian Gulf Business Insight, citing reading data, March transaction collapsed to 13,000 deals worth 37.2 billion dirhams. AGBI called it the steepest monthly drop since the pandemic. Bloomberg, on April 23rd, citing ValueStart, reported that the first month-on-month price declines since 2020, down 5.9%. Fitch Ratings has projected a possible 10 to 15% correction across 2026. The World Bank, in its April MENA update, slashed UAE's 2026 growth from 5% down to 2.4%. Bloomberg Opinion ran a piece around the same time with the headline that the Dubai is fine narrative is looking a little stretched. So that is the damage. The pain is real, the numbers are real, and I'm not going to pretend otherwise. But here is what almost nobody is reporting. Read those transaction numbers again. January, 17,000 deals. March, 13,000 deals. 2/3 of the buyers are still showing up in the middle of an active war with drones being intercepted overhead. In any other major city on earth, whether it be London, Hong Kong, Tokyo, New York, a war within 200 kilometers would zero the entire market. Transaction would go to zero. Buyers would disappear. I checked with Emaar, the top developer in the UAE. They confirmed in April as well that 2/3 of the buyers are still transacting. And 69% of the secondary market sales were cash transaction, not mortgages, not leveraged buyers stretching their budgets. It was cold, hard cash. That tells you something profound about who is actually buying real estate in this city. And then there is the structural buffers most people don't even know exist. The Dubai International Financial Center, in their official Q1 2026 release, reported 775 new company registrations between January and March. That is a 62% year-on-year jump that I mentioned earlier. The strongest chart in any of the DIFC's history that happened during the war. And then the most important data point of all. On March 9th, 2026, while missiles were still being intercepted, S&P Global Ratings affirmed the UAE with a AA stable rating. They called out the government's net asset position at 184% of the GDP. And in the same statement, they wrote, and I want you to listen this very carefully, the regional war and the severe threats at the UAE's key infrastructure will recede after a few weeks, and a period of recovery will be enabled by the authority's strong balance sheet. That is one of the 3 biggest credit rating agencies in the world telling the planet in an official sovereign statement during an active war that Dubai is going to recover. I am experiencing it firsthand. I haven't seen any construction site which is on hold. New highways, new beaches are getting inaugurated during the war. So yes, there is damage, there is pain, but the structural pillars of UAE are absorbing the shock, and in some segments they are accelerating because of it. Now let me show you why. Here is what every panic articles forgets to do. They report on Dubai in isolation. They never put it next to anything else. So let me do that for you now. Because the moment you zoom out, the entire picture inverts. Let's start with the euro. The European Central Bank, in their March 2026 projection, cut down the Eurozone growth between 0.9 to 1.2% for 2026. Germany, the engine of the continent, had its growth forecast cut in half by the Federal Ministry of Economic Affairs, from 1% down to 0.5%. According to the German Federation Statistics Office, inflation hit 2.7% in March 2026, the highest since January 2024, with energy prices up 7.2% year-on-year, motor fuel up 20%, and heating oil up 44%. On the other hand, France was paralyzed by the Bloco Tooth movement that translates to "Let's block everything." It was the protest against Prime Minister Bayro's 2026 austerity budget. The Bayrou government collapsed 500,000 to 1 million people on streets of Paris in September 2025. Now let's move to United Kingdom. In April 2025, before any war, the UK abolished non-domicile tax regime. The magnet that had pulled global wealth into London for 50 years, it was gone now. The Tier 1 investor visa had already been closed years earlier. According to Helny and Partners, UK lost 16,500 millionaires that I have been talking about. It is the highest in Europe. Additionally, the Financial Times conducted its own independent investigation using UK companies' house records. They found a 40% year-on-year increase in UK company directors reporting departures from Britain in the last year, and we already know the top destination for them. Let's move to the USA. We all know President Trump started a tariff war before this Iran war. He had been applying different tariffs to multiple countries depending on the relation with these countries. On February 20th, the United States Supreme Court ruled in 6-3 votes that these emergency power tariffs were unconstitutional. Then the administration had to scramble to replace them. On February 24, 2026, President Trump used a different play and invoked Section 122 of the Trade Expansion Act that imposed a 10% global import surcharge. According to Yale Budget Lab, the average effective US tariff rate is now 11%, and it is the highest since 1943. The Bureau of Economic Analysis reports US imports have now decreased by $73 billion year to date, which is a 9% collapse when compared. Consumer confidence is at its multi-year lows. Move to my personal favorite, Canada. The Statistics Canada reported on March 18, 2026 that the country's population has decreased by 103,000 people in fourth quarter of 2025. 2025 was the first calendar year of population decline in Canada since 1946, which shows immigrants are not trusting Canada and its economy anymore for the first time in 80 years. Let's go to Australia. The Reserve Bank hiked rates to 3.85%. Sydney and Melbourne housing markets are stalling right now. In New Zealand, Statistics New Zealand confirmed that local rates rose 12.2% year over year, the highest in decades. Let's move to Singapore now. Singapore is the country that almost never panics. Even they accelerated its $500 Community Development Council vouchers from 2027 to June 2026 because of import inflation pressure from the war. It's a $1 billion emergency package. And then there's India. They're also seeing the biggest wealth migration. And Indian buyers purchased Dubai homes worth roughly 11 billion US dollars in 2025 alone. Indians now account for 23%, almost 1/4 of the foreign property transactions in this city. They are not buying vacation homes anymore. They are building long-term wealth shields. So let me close this chapter with one observation. While Bloomberg runs panic headlines about Dubai, every other major economic region in the world has its own crisis. Europe has stagnation and an energy shock. The UK has its wealth exodus. America has impacts of self-imposed trade war, and they are still doing the math on the Iran war. Asia has demographic collapse. Canada is shrinking for the first time in 80 years. The International Monetary Fund, in its April 2026 World Economic Outlook, which they titled The Global Economy in the Shadow of the War, cut global growth to 3.1% for 2026, which is a big deal. So friends, there is no safe haven left in the Western model anymore. And that is exactly why 9,800 billionaires moved into the UAE in 2025, before a single missile was even fired. They saw the writing on the wall earlier than rest of us. Now here's a masterclass that even military analysts are still studying. I told you in chapter 1 that Iran launched 537 ballistic missiles and 2,256 drones at the UAE. The interception rate was over 96%. But that's just a number. Let me tell you what 96% actually meant on the ground. During the worst week of the war, the first week of March 2026, Dubai Metro kept running. Banks never closed. The DIFC continued to register more new firms during the war. Dubai International Airport, which closed on the night of February 28th, first time in the human history, was operating limited flights by March 2nd and back on phased reopening scheduled by March 7th. This is a 1-week recovery from a direct missile debris impact on busiest international airport on the planet. For context, most countries cannot manage a snowstorm. Dubai managed an active war with thousands of incoming projectiles without losing any core civic functions. This is what us management consultants called high reliability organization, and we witnessed it at the sovereign level. It's the same framework used to evaluate nuclear power plants and aircraft carriers, systems where failure is not an option. Dubai has built that level of operational discipline into running of an entire city, and the people who can live anywhere on earth, they noticed. Pavel Durov, the founder of Telegram, said publicly during the war that Dubai was operating better than most European capitals. Elon Musk said the same. These are not paid testimonials. These are men who own private jets, who can relocate to any country in the planet within 24 hours, who have access to security infrastructure most governments cannot afford. Now here's the philosophical core that explains why Dubai handles crisis like this. There's a phrase that you will hear from every senior advisor in this city: develop first. Most cities wait for demand to arrive, then build the infrastructure to serve it. Dubai does the opposite. Dubai builds the infrastructure first and trusts that demands will follow. The Burj Khalifa was built before there was anyone to fill it. The Dubai Mall opened before there were enough tourists to justify it. The Expo 2020 site was constructed before COVID decided to delay the event, and Dubai relaunched it even at larger scale. Every single time, the demand showed up. And this is how I connected it to the war directly. The same develop first philosophy was applied to defense. The integrated air defense system that intercepted those missiles were built, layered, and rehearsed years before anyone thought it would actually be needed. The Federal Emergency Response Infrastructure designed and tested. The diversified port and air cargo network that allowed Dubai to reroute freight through Al Maktoum International Airport when Hormuz closed, that was built on the assumption that Hormuz might one day close. Dubai didn't survive the crisis. Dubai planned for it 5 years in advance. And here's the proof that the strategy is continuing right now, in the middle of all this. According to Joby Aviation and Skyports, the world's first commercial flying taxi network is on track to launch by the end of 2026 across 4 locations in Dubai, connecting DXB Airport, downtown Dubai, the Atlantis on Palm Jumeirah, and Dubai Marina. A 45-minute drive becomes a 10-minute flight at 320 km per hour. Next, according to Dubai Civil Aviation Authority, drone delivery is targeted to cover 30% of Dubai by end of this year and 70% within 5 years. WeRide, Pony.ai, and Apollo Go are running commercial driverless robotaxi operations on Dubai roads as of April 10, 2026. And on February 3rd, 2026, the Road and Transport Authority signed a definitive agreement with Elon Musk Boring Company to build the Dubai Loop. It is an underground tunnel network connecting DIFC to Dubai Mall, with Tesla vehicles moving at up to 160 kilometers per hour. The phase 1, which is 6.4 kilometers, 4 stations, will be delivering in approx 1 year. So the question I want you to ask yourself, does this look like a city that is pausing because of an active war? Or does this look like a city that is using the war as a cover to leave the rest of the world even further behind? Okay, so this is the chapter that I told you to pay attention to. So lean in. Most people, when they think about Dubai's economy, they think tourism. The beaches, the Burj Khalifa selfies, the desert safaris, the 7-star hotels. And it's true that Dubai welcomed roughly 19 million international overnight tourists in 2025. And they hit a record, by the way. And yes, tourism in March 2026 took a beating. We have covered that. But here's what almost nobody ever explains. According to the Dubai World Trade Center's Economic Impact Assessment, which is the most rigorous study of Dubai's business event sector, the average international business delegate attending a trade event in Dubai spends around 9,833 dirhams per visit. The average domestic attendee spends around 1,673 dirhams. That is 6 times more per person. Now multiply that across millions of delegates and you start to see where the real money is. In 2024 alone, the Dubai World Trade Center, one venue in one city, hosted events that generated 22.35 billion dirhams in direct economic output. That was from a single complex in a single year. 13 billion of that was retained as global value added to Dubai's GDP, and around 85,000 jobs were supported across the city-wide ecosystem. But here's the number I want you to write down. The number that explains everything that's coming next. For every 1 dirham spent at Dubai World Trade Center event, a 7.7 dirhams is generated in the wider city economy. 7.7 dirhams, the exact quote from the assessment. Now let me explain what that actually means. When an exhibitor pays for a booth at a trade fair, that money doesn't just stay there, it cascades. It goes to the hotel where the delegate stays, and according to DWTC, the hotel revenue grew 15% because of trade events. It goes to the retail, which grew 34%. It goes to the food and beverage industry, which grew 30%. It goes to the taxi driver, the restaurant, the law firm drafting the contracts, the bank wiring the funds, the printer making business cards. 1 dirham becomes 7.7 dirhams, spreading through the city like a successful, well-strategized pyramid scheme. That is the engine of Dubai's economy. And these are not small events. Let me give you the breakdown of just 3. Number 1. Gulfood. According to United States Department of Agriculture, Gulfood 2025 hosted 144,000 visitors from 198 countries, with 5,500 exhibitors and signed $20 billion in trade deals over 5 days. I'll repeat that, $20 billion in 5 days. That single event represents approximately 1% of the entire global food and beverage trade. And the 2026 edition, held just 1 month before the war broke out, expanded across 2 mega venues, brought in 8,500 exhibitors, and according to Dubai World Trade Center's official press release, they signed 168 billion dirhams in deals through the Big Deal Hub. Read the number again, 168 billion dirhams of trade in one event. The US authorities are still crunching the numbers on this year's event as they got busy. And you know where. Coming to the number 2, GITEX Global. According to official closeout, GITEX Global 2025 hosted 6,800 tech companies, 2,000 startups, and 1,200 investors from 180 countries. The Expand North Star, a side event of GITEX Global, hosted investors managing $1.1 trillion in assets. Yes, trillion with a T. In one room, in one event in Dubai. And number 3, which I highly regard, the World Government Summit. The 2026 edition, which held in February, brought together 35 heads of state, 150 government delegations, and over 6,000 elite participants, which included CEOs of Airbus, IBM, Ericsson, and Alibaba, sitting in one room in Dubai. While Europe debates whether to ban TikTok, Dubai is hosting the rooms where global policy is actually written. The reason that I mention this one because it is my favorite. I feel any country with right governance can grow to multifold pace. And UAE is one of the very few which teach and learn from others and implements the right policies through this annual event. Now here's the punchline. The bounce back logic that almost no panic article understands. A leisure tourist who cancels a vacation might never come back. They'll go to Bali instead. But a businessman who has signed $1 million in deals at Gulfood 2026 will not skip Gulfood 2027. Because the moment his competitor shows up and he doesn't, he loses market share. He loses the suppliers, he loses the contracts. Business tourism is not a luxury. It is a mandatory operating cost for global trade. That means the moment the first major event relaunches after this regional lull, the bookings will flood in. And every single delegate who shows up will trigger that 7.7 multiplier all over again. They will book a hotel, they will eat at a restaurant, they will take a taxi, they will sign a contract, they will fly home. And 1 dirham will become 7.7 dirhams across the city exactly as it has every year for the last decade. This is why the bounce back will be sharper and faster than anyone is currently pricing in. The leisure tourist might take 18 months to return. The businessmen will be back the moment Dubai announces the next event date. That is the playbook. And it's happening again right now. The current war is being used as a renovation window. According to CoStar STR, hotels are using this lull to remodel. According to Dubai Media Office, the Dubai Loop Tunnel deal was signed during the war. And on April 29th, Dubai Land Department announced to remove the 750,000 dirhams minimum property value threshold for a residency visa, which means you can now qualify for a 2-year UAE residency at almost any property price point. According to S&P, DIFC, Knight Frank, capital is still flowing in, it's not going out. And we have learned this from 3 historic crises and 3 double downs. 208 crash, there was difficulty, but Dubai picked up faster than anticipated. The 2014 oil crash, Dubai accelerated diversification. The 2020 COVID pandemic, Dubai delivered Expo 2020. Now, in the 2026 regional war, Dubai is launching flying taxis, signing Dubai Loop deals, breaking real estate price records, and absorbing a 62% surge in financial firm registration. 3 of 3, it would be statistically irresponsible to bet against this pattern. So this brings me to the last part of the episode, the part where we ask the most important question. What are the key takeaways for you? I have 3 and you should write these down. Takeaway 1. Geopolitics is noise and fundamentals are the signal. Every single time there's a regional headline, the news media goes into panic mode and runs article about how Dubai is finished. Every single time, within months, the data shows the opposite. Let me tell you what institutions actually said during the war. CBRE, in the Q1 2026 UAE Real Estate Market Review, wrote, and I quote, "Recent geopolitical developments have undeniably influenced sentiment and short-term activity, but the UAE real estate market has showcased its inherent stability." Next, S&P on March 9, 2026, while missiles were still flying, affirmed the UAE at AA stable, and they forecast that the war would recede after a few weeks with recovery enabled by the authorities' strong balance sheet. Moody's followed with their AA2 stable affirmation on March 30th. JLL projected sustained 2026 momentum, supported by $470 billion in committed UAE real estate projects through 2030. Knight Frank's Prime International Residential Index ranked Dubai at number 2 globally for prime price growth in 2025, which is up 25%. with 500 super prime sales in the $10 million plus segment, which is almost equal to London and New York combined. None of these fundamentals changed because of the war. So train your brain. When you see a panic headline, ask one simple question. Has any actual fundamental changed? In Dubai's case, for the last 20 years, the answer has been no. Coming to takeaway 2. In Dubai, the biggest risk is not buying, it's waiting. Let me explain this with a simple math. A property at 1 million dirhams, you think let me wait 12 months for a 10% correction. You are going to save 100,000 dirhams, which sounds smart, but wrong. Because while you wait 12 months, you are losing 6 to 7% in rental yields that you could have been earning. That's 60,000 to 70,000 dirhams for gone rent. Net gain roughly zero. As in 9 out of 10 historical cases, the prices didn't drop anyway. Even now, 2/3 of buyers are still transacting in the middle of an active war. That means while you are waiting for clarity, the smart inventory is being absorbed every single week. The discount you are waiting for is already being closed. Coming to takeaway 3, you are looking at 1 in a decade entry window and it is closing very fast. Some developers are nervous. Even tier 1 developers are coming with project prices not seen since COVID, with most comfortable payment plans possible. Developers extended post-handover schemes, negotiated final payments, deferred service charges, waived DLD fees, offered furnished units at unfurnished prices. The DLD eliminated the minimum property threshold for the 2-year residency visa. The Dubai Executive Council approved a 1 billion dirham economic stimulus package on March 30th to improve liquidity and reduce short-term costs for companies in Dubai. This is panic from developers to maintain their cash flow, not panic in the fundamentals. And the moment regional tensions cool by even 20%, the moment Gulfood 2027 announces its lineup, the moment flying taxis take their first commercial passenger, the moment the next 422 million dirham penthouse hits Bloomberg, these incentives evaporates overnight. Developers will move away from the negotiation table that only early movers could leverage. Bloomberg on April 8, 2026, when the first ceasefire signal hit the news cycle, recorded the DFM index jumping 8.5% in a single session, the biggest intraday gain since December 2014. That is how fast the market reprices when the headlines flip. The window will close in months, not years. Trust me on this. Now, I want to leave you with one final thought before I tell you what to do. Friends, you and I, we have all worked very hard to be where we are at today. Think about your own life. Think about what you have built. Think about the sacrifices that you have made. And ask yourself, if someone tried to take it away from you, what would you do? You would do anything in your power to protect it. Now imagine what is going through the minds of UAE's leadership right now. These are people who took a desert with very little oil and very little water and a very small population, and turned it into world's #1 wealth destination in 50 years. They are sitting on one of the largest sovereign wealth funds on the planet. ADIA alone manages over $1 trillion, combined with Mubatala, an investment corporation of Dubai with other driving vehicles. That is well over $1.5 trillion of firepower, sitting in the war chest, ready to deploy. Now ask yourself, these people who built all of this from nothing, with that kind of capital under their command, with the world's wealthiest residents calling Dubai home, do you really think they will let 50 years of work be undone by 30 days of headlines? They won't, they can't, and they have everything they need to make sure they don't have to. That is the bet, that is the fundamentals that the 9,800 millionaires who moved here in 2025 are betting on. That is what all the institutions, Knight Frank, S&P, Moody's, Henley, JLL, and CBRE are all telling you to look at. And that is what every panic article on conventional media house has somehow missed. This is Simran. I am a senior property consultant in Dubai with Experience Realty. working as real estate investment advisor. While the world is panicking, I am on ground every single day, talking to developers, tracking the price structures, comparing communities, and identifying opportunities where the math work in your favor. Right now in 2026. If you have been on the fence about current market trend in Dubai, message me. I'll personally walk you through the projects where the developer concession actually means something, where the location has structural moats, and the entry point makes mathematical sense at the levels we are seeing right now. By the time next person makes this video, by the time news cycle flips, and by the time your friend starts telling you Dubai is the best investment they made, you are not early investor anymore. You are another late buyer paying a premium. And nobody in any market, in any city, in any decade has ever made real money by being the late buyer. The window is open right now. Let's not waste it.